Continuation with the last class. Test your knowledge question number 2. Here they provided that BYD Allo Limited first opened its door in 1990 for business, and it is a major supplier of metal supporting over a dozen different industries and employs export to support each industry. This includes wood and panel product manufacturing, healthy products, site furnishing, commercial and residential constructions. It has grown through deviations its customers, dedication to customer service and commitment to quality of work. So it is a new firm. It has working performance is good. Next, the company has two divisions. It has two divisions, division Y and division D. Each division work and investment. Each division will work on investments center separately, so they are both have independence. Salary of each divisional manager is 7,20,000 per annum with addition of an annual performance related. So in addition to that salary, they are providing bonus, divisional return investment. This bonus dependent on return investment what the company was earned. Next, the minimum ROI of 12% is to be expected to be achieved by each divisional manager. So minimum 12% ROI is required. If manager only achieves the 12% target, then he will not rewarded any bonus. So whatever they are telling 12% minimum requirement, if you earn the 12% ROI, then you cannot get any bonus. But if in excess of 12%, that is where every whole 1 point of above 12%, then division achieves for the year a bonus equal to 3%. So minimum 3% will be start from when above the 12% of ROI. If you have a 11% ROI, you cannot get any amount. If you have a 14% ROI for above 12%, 2%. For each point you will get 3%, 6%, like that. Next, maximum bonus will be 20%. So minimum 3%, maximum 20% of annual salary which amount was 7,20,000. Okay, the figures belonging to the year end 31st March 2019 was provided below. Okay, division Y and division D, and division revenue was provided. First, they provided that ROI, but 12% of minimum ROI they will require. ROI formula means return divided by investment. Returns, revenue 29,000 provided. Division D 17,400 and profits 5,290 and 3,940 less head office expenses. Head office expenses will be ignored because it is uncontrollable. Here the divisions both have individually performing, so we could take the return only to the extent of controllable return, which is in the hands of division Y and division D, and this head office expenses will not be their hands, so it will not be considered. Okay, it will not be considered. Where we will controllable profit is 5,290 in case of division Y, and in case of division D 3,940. Next, now numerator part return was came, and we required denominator part, that is assets investment. They provided that non-current assets 19,520. Next, cash inventory trade receivables 4,960. So 19,520 plus 4,960. Trade payable, that is liability, minus 5,920. This amount will be net assets, whatever the investment, 19,520 plus 4,960 minus 5,920. Same like as division D also, we will get the investment from returns. Outside we got the controllable return, that is 5,290 divided by whatever amount if you get here, that will be added, that will be divided, then you will get the return of investment. Whatever the return of investment you will get, if your return of investment is 16%, for example 16%, then you will get the bonus of above 12% of 4%. So for each point you will get 3 into 4, 12%, you will get the 12%. If you have 22% means 10%. 10% is excess. 10 into 3 30, you will not get the 30, but maximum will be 20 only. That is the case. Next, during the financial year 2021, FAI managers of division D invested in 13.36 million in new equipment, including an advanced cutting machine, which will be increased productivity by 10%. So what they are telling that they are investment new equipment included advanced cutting machine, which is increased productivity. They are invested in one machine. Who is investing? Only division D is investing, so that cost was decreasing 10%. HAI manager of division Y has made no investment during the year, so he is not going for any investment. Even its computer system needs updation, so he is not updating his systems also. Next, division Y manager has already delayed payments to its supplier due to limited cash and bank balance. So he is not have sufficient cash balance also for division Y. He is still better than that division D. For required for each division, compute ROI. ROI we are already calculated, that controllable profit divided by investments. Next, justify figures used in the calculation. Okay, compute bonus of each manager for the year end 31st March 2021. That is, we are also calculated that bonus. How? Whatever the excess amount we will get on upper, that is first point ROI, we will get the bonus accordingly. Next, discuss whether ROI provides justifiable basis for computing the bonus of managers and problem arising for use at BYD of the financial year of the year 31st March 2021. So we will provide that. How much investment decreasing, how much return is increasing, we will provide that. Here bonus was minimum bonus was 3%, maximum bonus was 20%. Let's see the answer now. Question number 2. So answer was provided. What is there in answer? Started with year. Third one, that one. Okay, RY provided that division Y from controllable profit, we will take only the branch profit only, and we will not take that head office expenses of controllable profit. Next, assets will be added, liability will be deducted, we will get the net assets. ROI will be that returns divided by controllable profit divided by net interest, you will get the ROI 28.5%. Next, division D, same like that. So here what is the amount we have got? 28.50, that is excess of 12%. You will get the bonus. How much you will get the bonus? That 12% means 8% year, 8% year, 8.5, 16.5 is the more. 16.5 into 3, it will become 16 3 15 3 45, 16 3 48. You will not get the 48 amount. Maximum will be 20% only. Next, in division D, it was 11.7. It is not excess of 12%. So you will not get any dividend, any bonus. Next, responsibility accounting advocate that manager performance should be judged based upon how well he or she manages the items under his or her control under the computation of ROI of both division controllable profits. So we will take only controllable profits has been taken into consideration, because head office cost they have not their hands, not controllable and responsible accounting consideration that be manageable only that persons. Because head office costs are not controllable by division managers. Figures of non-current and current assets apart from the current liabilities have been taken into consideration, as there are such items over which division managers have complete control. Next, bonus amount. For bonus amount, bonus to be paid for each percentage point, that is 7,20,000 will be the maximum salary into 3%, 21,600, and maximum bonus will be 7,20,000 into 20%, that is like 1,44,000. Here division Y was excess of that is 28%. Return of investment will be 28.5, which results in 16% whole percentage point above the minimum required. ROI will be 12%. Hence the bonus according to whole percentage excess of ROI will be 3,45,600, but whereas maximum amount will be 1,44,000. So upper limit will be 1,44,000. You will get bonus was 1,44,000. Next, division D ROI was less than 12%, so less than minimum required ROI, hence FAI will not rewarded with bonus. Next, discussion for third point. FAI, here they provided that FAI will not receive any bonus because he is not have the return investment is less, and where division Y he has got the return investment, and division D here not at any point above minimum percentage. This is due to large investment. He is always going for investment, and another person he is not investing. He is RCC. Even they want for updation, they are not going for updation. So we here, because of this, due to large investment based on the which ROI figures has been computed, total investment of division D are almost 1.81 times. 1.81 times. So it will double, 1.81 times division Y. The major reason behind this is that division D invested 13.6 million in new equipment during the year. Ignoring this investment of division D is just 1.1 times of that division Y, and next investment would have been 20,000, and ROI of division D would be 19.62, resulting payment of bonus. Then we will get the bonus if we are not invested in new assets. Because of invested in new assets, so that our investment was increasing. When the denominator is increasing, you will get the less amount of return on investment. Next, rather than nothing. So FAI is being penalized for making investment. So they are making for investment, so they are penalizing. Because of new investment, enhanced productivity, which will support customer loyalty, dedication to customer services and quality. The CSF for BYD, it is very surprising that he decided to invest where he know that he would receive lesser bonus subsequently. On the other hand, HAI has taken benefit from the fact that there is no invested anything, even though it was needed for computer system updation. So they would need for computer system updation, they are not doing. This is an example of suboptimal decision making, where required for bonus one person, but you are paying for another person. This is a suboptimal case. Next, further division Y, a trade payables are more than double those of division D. In part of 1 would be expected to this due to higher sales, that is 66%, and low cash levels at division Y. Higher trade payables lead to reduction in net assets figures. The fact of BYD is rewarding high with bonus, even though relationship with suppliers will may be badly affected, is again in case of suboptimal decision making. So you are paying more amount, who is a person not eligible, who is a person not correct, and if the profit margin, that is excluding head office cost is not our controllable, has percentage of sales as calculated, it comes to 18.24 of for division Y and 22.64 for division D. Therefore, it can be seen that division D is performing better if capital employed is ignored, and ROI simply disastering the division D performance. FAI might feel extremely disappointed by getting nothing, and in future he may opt to postpone the investment to increase the bonus. So they will not go for investment, they will get the more bonus. Non-investing in new technology and equipment will mean that BYD will not be kept updated with industry changes, and its overall future competitive will be affected. Briefly, the use of ROI is resulting in suboptimal decision making and lack of goal congruence. That is, what is good for manager is not necessarily good for the company too, and vice versa. Hence, ROI is not justifiable basis to computing the bonus of division manager, and also cause problem for BYD. This is question number 2. Next, question number 3. What is there in question number 3? We will see that. Hey, cool buddy. X greeting Korean. What is their Korean company? It is a Korean company. This Korean company question related to EV only. We will see next other one. Fourth one, we will see first fourth one. Water utilities. Complete, we will complete. Okay, no issue. Third one, EVA question only. X Greeting is a Korean company based in Suwon committed to supplying the highest quality stationery greetings, gifts, children products which are sourced for all over the world. So there is one Korean company is providing high quality stationery, and company also distributed Sunday papers Korean made by eco-friendly stationery design and manufactured in solely home currency in the KRW. It is also listed on the KRX of last 20 years, and its current share price was 23.25. okay, its current share price was, they were provided 23.725, 23.25. okay, no issue. Next, what is there next? You are the management accountant of X Greeting, and directors have asked you to study X on value based management, which is different approach to the performance management. The director have heard about this method, considering it is a way of focusing shareholders interest, and in the present economic scenario they think it to be useful for the growth of X. Next, conventionally earning per share, EPS, and share price were being used to assess performance. The conventional earnings per share and share price were being used to assess performance. The proposed change are important by directors. What is the change? So financial data was provided for X Greeting company. So profit after tax, that is earnings, was provided. They provided for 2 years, current year and previous year. Okay, 55.55 and 65.38 this year and last year profit. This is profit after tax, PAT. Okay, first we will see what is required. Assess the performance of X Greeting using EVA. So what is the formula of EVA? EVA formula will be EVA formula EVA formula will be NOPAT minus capital employed into WACC. That is EVA formula. Next, analyze the result relative to those earnings per share. EPS formula will be profit after tax divided by number of shares and share price. Next, share price means share capital divided by number of shares. You will get the share price. Assumptions, if any, should be cleared. Okay, we will want economic value, EPS, and share price assumption, and assess the performance. We need to assess. Okay, what is the information they provide? Profit after tax provided. So for profit after tax and divided by number of shares, we will get the EPS. So we got the profit after tax. Next, they provided interest. Okay, next, opening capital employed. Opening capital, where will we utilize it? This is useful for WACC calculation. Next, WACC calculation, we will take the opening capital only. Next, closing capital they provide. Closing capital, that's not very important, it will be irrelevant. Next, capital structure, debt to equity. Why it is required? We will calculate with WACC, weighted average cost of capital. They provided that equity 14.2, 11.5. Debt pre-tax, they provided pre-tax, but we required post-tax, so we will deduct the tax portion from 8 or 6. Tax rate was 30%, so 8 into 1 minus 30, 6 into 1 minus 30. Next, stock market information. Average number of shares is issued 3.2. So from profit after tax 55.55 divided by what is the number of shares they provided? They provided that 3.2 million. So we will get the EPS. From EPS, earning per share, we will get earning per share. And next, they provided X Greeting share price. So X share price was provided directly. We got the information of two informations, 22.25 and 24.4. This is share price, and EPS we will get from profit after tax divided by number of shares, and the remaining information for economic value added. EVA calculation, NOPAT minus capital employed into WACC, and from that capital employed we will got capital employed, that opening capital employed, what is here, 273.58, and in this case 198.4. and what we want now, WACC and NOPAT. WACC will be it is a weighted portion, that is equity rate. What is the equity rate? And into percentage, 60 divided by 40 equity portion, that is. Next, debt we will take the post tax. Next, what you now required, NOPAT will be profit after tax they provided. So from that we will add back interest portion of tax, that is tax shield of interest, 15.6 minus tax amount 30%. We will add back that amount, or we will add back total amount, deduct the tax amount, then we will get the same answer whatever the amount. Next, so we will analyze the answer. Question number 3. So okay, this is conventional. The X greeting consider EPS and share price as performance measures. So they are considering EPS and share price as performance measures, but management has shown interest in using EVA. So management was interested in calculation of EVA and performance measurement now. Okay, what is EPS? EPS, earning per share. The performance of X greetings has gone down since earning per share is down by 15.03. So working note number 2. So we will get the first two. What is the EPS? EPS will be 17.36 and 20.43. Change was 15.03. This is EPS related, and share price was provided that 19.85 retail sector index they provided, and X share price was already provided 22.5 and 24.4, that is 7.79 was decreased. And from EPS, how we get the EPS? Profit after tax divided by number of shares, whatever we get, then we will get the EPS, earning per share. And EVA calculation, for EVA calculation, NOPAT minus capital employed into WACC. For NOPAT, what we required, we will profit after tax plus add back interest and tax shield, that is interest net of tax amount of 10.92 will be add back. Then now we will get the net operating profit after tax. Opening capital employed they provided. So from this assumption there is no non-cash expenses to adjust the profit, and economic depreciation and accounting depreciation are equal. No lease exists for capitalization. So in the case if they provided accounting depreciation, we will add back that accounting depreciation, we will deduct the economic depreciation, so that we will get the WACC amount here. NOPAT minus capital employed into WACC. After that we get the EVA. We will write this analysis. For EPS. They provided EPS for last year. It was down by 15.303, and this indicates the company is not performing well, and it is not in the favor of investor to continue with their investment in X greetings or invest further. Next, share price and index. However, the share price seems relatively better than the sector and stock market as a whole. Seems to be better than sector and the stock market as a whole. The share price of X greeting declined by 7.79. Share price was declined by 7.79 in comparison to 17.97. Decline in relating sector index. And 72 point. Why the share price was decreased? Due to market condition was decreased. Market index was decreased. So that our share price was decreased. Next, the sector comparison is relevant for determining the performance of X greeting rather than stock market all shares index. So performance of X is main important for decreasing the share price, but not for market index. Accordingly to this feature measure, performance of X greeting is acceptable because it is registered comparatively less distraction of market cap. This implies that the within retailing sector, X greeting is seen as company with better perspective, and this will encourage the shareholders to continue to hold their shares in the company. Next, EVA. EVA means X greeting has generated positive EVA. When it is a positive EVA, it is good for company, and same is less than what it earns during the year ago. Last year will be 53.96. Now current year will be 37.03. No doubt EVA falls by around 31% over a year, but still it is a positive, means value is generated, hence performance is acceptable. First we will conclude that here to conclude, even in the bearish market, X generating a capable to generate value for fund. There is market was here, the market was 22.49 and 17.97 and our share price was decreased nominally. So it is a bearish market. So in the bearish market, X generating capable to generate value for fund providers including shareholders, and the performance of X greetings is acceptable, can consider as good investment option. Next, question number 4. What is there in question number 4? Question number 4. Question number 4. Water utilities service limited. What is there here? Water utility service limited is established with aim. What is its aim? For supplying and distribution of water in Mumbai, as well as supply of water to various local authorities for distribution of to villages and other small cities adjacent to Mumbai. This involves planning, operating, treating, maintaining and distributing water resources in the country, urban centers and other. So this is one manufacturing unit for water providing, that is all are provided. Next, the government ensures that WUS does not take advantages of its monopoly position in the regional area by increasing prices. So the government controls majority services through water regulatory body, which determines an acceptable margin level. So it is has working with two divisions. One is water distribution operation and one is water bottle operations. For one was this water distribution operation is controlling by government, and remaining water bottle operations is not regulated by government, and WUS charges a market rate for water supply as is own, and for a regulated compute return of ROCE will be calculated, and its own valuation capital assets which are used in operation and the profit for this services. Next, acceptable level of ROCE set by regulator is 7%. Maximum will be 7%. Target ROCE will be 7%. If WUS breaches this level, then company would be penalized. WUS board is trying to improve the performance for the benefit of the shareholders. In order to communicate the objective of maximizing shareholders' wealth, the directors have decided to consider EVA as the key performance indicator. Next, compute EVA of WUS based on the following information from the year ending 31st March 2021. So what is they provided? Revenue they provided, less operating cost, less operating cost, less now operating profit we will get. What is the operating profit? 162. Okay, now we will see what is requirement. First of all, evaluate the financial performance of WUS using EVA. EVA means no PAT minus capital employed into WACC, and assess whether WUS comply with its acceptable ROCE. So for this we will calculate the ROCE. For ROCE we will calculate ROCE formula will be operating profits divided by capital employed into 100%. Next, advice on how to improve the profitability. To improve profitability, reduce the wastages and cost controls and cost reductions we will maintain that all. Then we will improve our profitability. Next, okay, for that we will see that what is their operating profit. So 162 was provided. Next, for this operating profits, less finance charges was 46, profit before tax was 116, tax at the rate 34.85, 34.8. Profit after tax was 81.2. Next, capital employed was provided 20. So for you want to know profit, we need what we need to done. We will need to done for operating profits, add back non-cash item, add depreciation item, profit doubtable debts, and research and development if any items is there. Next, audited accounts. They provided capital employed. Audited account for who is not regulating body is there, no, that one. Then we will take audited copy. And for WDO is regulating the government, so it will take that amount only. We will take the opening capital employed. Next, operating cost include. In operating cost includes depreciation. Depreciation will be add back because it is a non-cash item. Next, provision for doubtful debts. Provisions will be add back. Which amount will be add back? We will add back for the current year for the purpose of NOPAT. For capital employed, we will add back previous year data. Next, provision for doubtful 4 will be added back, and research and development 24, and other non-cash items 14. Here provision for doubtful debts, it has opening was 1 and closing was 4. No, during the current year. Okay, operating cost included 1. So in the closing it has 4 and it included in 1 for middle. What is the opening value? It may become 5. Research and development will be added back, 24 will be added back. Other non-cash items 14 will be added back. Next, economic depreciation. Here economic depreciation was provided, so accounting depreciation will be added back, economic depreciation will be deducted. Next, economic and accounting depreciation were assumed to be same. Next, current year tax paid is 18 crores and deferred tax provision was 16.8 crores has been adjusted. So whatever the tax amount paid, we will take that only, we will deduct that only. Whatever the tax paid amount 18 crores was paid, we will be deducted this amount. And next, the provision for doubtful debts was 9 crores. This is provision related. Okay, in the balance sheet, 2021 balance sheet. Okay, for provision opening balance they are providing. For closing is 4 and opening was 9. What is the difference? We will seek that. Next, research and development has been non-capitalized. Research and development will be added back, whatever the amount will be there, and it belongs to new project that will be developed over 5 years and it is expected to long-term benefit. If it is a new, it is not there in previous year, so capital employed will not be adjusted any items. Next, cost of capital provided equity and debt they provided pre-tax, but we require post-tax. Next, gearing of WUS, equity debt, weight, that is weight anamata. Now we will see the answer. Which one? Question number 4, no? 4. This is 4. Computation of NOPAT. So for the operating profit, we will add back the all non-cash items, accounting depreciation, doubtful debts, research and development, and we will deduct the economic depreciation, tax paid, and tax saving on interest. We will get the NOPAT amount. Next, computation of capital employed. We will here in NOPAT we will take these items are related to this current year. Here capital employed, this information related to previous year data we will be added back. Next, non-cash item, provision for doubtful debts and adjusted opening capital employed. Next, WACC. What is the WACC? Weight into cost of equity, weight into cost of debt. Cost of debt will be taken post tax. Next EVA, no PAT minus WACC into capital employed, 124.2 minus 18.8.61 into 1512, 124.2 minus 130.18. Now EVA was negative sense. Because of negative sense, negative sense means it is not able to meet the economic cost, so it is not able to meeting economic cost. Presently WUS is distorting value, and as it is not able to meet the economic cost of its own capital, this put the company into question of perpetual succession and leads the company against shareholders interest. The reason could be higher cost of equity for WUS. The investing risk should be low, since 75% of services that the company renders are important for the economy and demand is guaranteed in future. Optionally, WUS needs to either increase its NOPAT enough for break even on economic value added, or slash its capital employed by selling unutilized or underutilized assets. Next, regulatory ROCI target was 7%, which we discussed in question. And what is the current operating profit was 95, and divided by capital employed 1422 and into 100%, that is 6.68. ROCI CE is will be acceptable when ROCE is 7%, so it is less, which is not acceptable, within acceptable. Next, operating margins. Water distribution operations was 17.12, water bottle operations was 36.02. Advice, what will be advice here? It is the advice operating margins for WBO is 36.02 compared to 17.12 of WDO. WUS may use the WDO activities as a trusted source of cash profit to reinvest in expansion of WBO. Here WBO is going good margin, so whatever the amount is there of WDO, you can use that amount for investment. Next, expansion through acquisition of appropriate non-regulated business using the cash generated by the regulated activities might be good decisions. Further, WUS may improve profitability by controlling costs within WDO activities through performance measurement. The regulatory body cannot argue that the company is overcharging its customer to increase profit margin. This is possible through strict observance of expenses and using cost savings techniques through efficient improvement. In order to control cost within WDO, target should be based on minimal variance and adapting cost cutting methods. Overall, in WDO, there is only a limited scope for increase in the operating profit, since the maximum operating profit allowed is 99.54 crores, that is 7% of 1422 crores. Capital employed, thus WUS should go to expand its WDO as this is producing higher operating profits. This is related to fourth question. Next, question number 5. We can see fifth question or not. Let me see. Continue. Fifth question. What is provided in fifth question? Beta Control. Beta Control is a global leader manufacturing of commercial building control system with over 250 distributors. So it has 250 distributors. Okay, 250 distributors and many thousands of installations in more than 50 countries. So involve air conditioning systems, facility management, energy and water management, access control and security control, etc. At BC, manufacturing is done at number of factory sites where some products are easy and largely produced and have long life, while other products are intricate and have short life due to changes. These are waste information here. A newly appointed CEO and agrees about declaring sharp price. The price is decreasing. So what he is doing? BC focuses must optimization and upgradation of his value generation. So he is okay. what is the information we required. Assuming yourself a performance management expert BC CEO asked you to implement program. Firstly, she want to review the use of EVA. So we want EVA, economic value added. Economic value added formula NOPAT minus capital employed into WACC. Next, you are given the current EVA computation. So from Annexure 1, but there is some suspicions about whether the assistant who has done this work is sufficiently well trained about this method. So she requires you to examine the accuracy assumptions forming part of the calculation. So we need correct EVA. Next, here based on that whatever they provided from Annexure, they providing the some information related to their operating profits and their additions and their deletions they provided. Okay, particulars, NOPAT. First one, NOPAT provided. How they calculated NOPAT? Based on operating profits was 1001 to 102.8. Okay, add non-cash expenses. E is done, non-cash expenses good. Next, marketing capital employed 46.2. It is correct, and they provided one note. Note 7. What is there in note 7? Marketing expenditure has been 46.2 lakhs each year for last 2 years to build the long-term brand. What is this information? It is required for capital employed. So in capital employed, previous year will be added back. Current year will be added to the NOPAT. Next, 46.2 will be added. Less tax amount will be deducted. 269.6 they were deducted. So they provided note 9. What is there in note 9? BC has paid tax 260. So whatever the amount you have paid, you must take the deduction. So 260 will be deducted. And while the tax charged as per account was 269.66, it is wrong. We require to take 260 at year. Next, last tax relief on interest 48.96. Yes, we will take 48.96. So we require what is here require, and thus two amounts. Marketing expenditure, that related information will be added to the capital expenditure, and here tax amount will be taken 260. That is the two mistakes has done in NOPAT. And next information, what is the information is provided? Okay, from statement of financial position 4802, he has taken that note number 10. Note number 10, capital employed. During the period, we will take the opening band. That is 4564 is required to take. What he has taken 4802. It is taken wrong information. Next, added market expenditure, capital expenditure 46.2. Yes, from 0.7 we have need to add it back. Next, adjusted capital employed, they provided wrong because opening amount was taken wrongly. Next, WACC they provided 1 off into 15% plus 2 1 off into 7.8. So what is the debt? They provided debt, they are not provided debt here, they provided downside. EVA they calculated, and we have NOPAT wrong and capital employed wrong. For WACC we will see the debt equity ratio 1:1, so 1/2 correct. Cost of equity 15 correct he has taken. Cost of debt 7.8, that is pre-tax, so we require to take post-tax, so WACC also wrong. Total formula information was wrong. NOPAT wrong, WACC wrong, capital employed wrong. Though we will require to provide the right information. Tax rate will be 30%. So from pre-tax this 7.82 we will deduct the 30%. Then we will get the actual post cost of debt. Next, interest charged in the period was 163.2. And if you want to check the percentage, we will check the percentage, no issue. Next, in the current physical year, BC spends 80 lakhs in training development by leveraging the latest different digital technology, including in virtual classroom, to deliver highly relevant training to employee at the point of need. So this is current year expenditure. You need to add back to the operating profits, which he has not added. Operating profits will be for training development will be added. Next, marketing expenditure already that treatment is completed. Next, R&D spending was 20 will be added back to the operating profits. and this is during the year, so for this is during the current year, so it will not impact the capital employed. Next, 9 point adjustment we are already considered, capital employed consider. So we will adjust this training development and R&D in operating net operating. We will get the correct no PAT. Question number 4. Question number 5, I think so. Question number 5. See, what is there? No computation of no PAT. Computation of no PAT. Operating profit they had taken 162. Add back non-cash items 14. Accounting depreciation 118. Doubtful debts 4. Research and development 24. Less economic depreciation will be 164. Accounting depreciation will be added back. Economic depreciation will be deducted, and tax paid will be deducted, and tax saving and interest will be deducted. That is 46 into 30%. 46 into 30%. Next, 13.8. No PAT will be 124.2. Computation of capital employed. We will take the opening capital employed and we will add back to the provision for doubtful debts whatever the amount is there, and we will adjust that amount of other non-cash items, whatever the other non-cash items which is not taken, we will add it back. Now WACC will be after the pre-tax will be considered, so we will get the EVA. Next, answer will be fourth one. We have calculated fifth one here, na? Fifth one. Fourth one is already completed, huh? Just a second here. Which one we are doing? Fifth one. Fourth one already completed. This is related to WDO, water. So we are doing now fifth one. This one already completed. This is target to ROC. Here we require to report. When we require to report, we will give the to, from, date and subject. Here subject was evaluation of EVA at beta control. Okay. Here EVA provides link between decisions. EVA provides link between the decision, performance measure and rewards, which focuses managers on performing better. Next, incentive schemes based on EVA provides better quality information and motivated in making the decision. Whenever you are giving the incentive schemes, these provide the motivation to them and they making the decision which in turn maximize shareholders' wealth. In other words, EVA linked the operating return to the assets that were used to generate those returns. Now, the learning which flows from EVA analysis can be prospective and can allow the managers not only to identify areas of weakness in performance but also to easily find solutions. BC is multi-product. BC is multi-product company having number of factory sites. EVA can help to appraise divisional contributors to or distract from overall profitability. Thus, managers may be educated through EVA and pursue such objectives that improve operating profits, investing more capital. Next, in addition, this report deals with evaluation of accuracy and assumptions used in calculation of BC EVA. There are many errors in the present calculation of EVA. These have been discussed below, and revised calculation which will be added. That non-cash items will be added, depreciations will be added, marketing expenditure will be added, development expenditure will be added, research and development will be added, tax paid amount will be deducted, tax and interest portion will be added. That is, they provided non-cash items has been correctly added back to the profit, as these are expenses which do not affect the cash flow of given period. Next, addition back to the marketing expenditure is also correct, as spending contributes to future value creation. For the same, the prior year spending is also added to the capital employed. Next, training and development expenditure should be capitalized. So training and development expenditure should have been treated as expenses in the current income statement. So they should be added back to the profit and added to the capital employed at the end of a year. Research and development expenses should be treated as marketing expenditure for long period. The tax expenses in the EVA calculation should be tax paid with adjustment for lost tax relief on interest and not adjusted amount of tax charged on the interest amount. Next, WACC is incorrect because it should be based on post-tax cost of debt. So they are considered pre-tax cost of debt. Next, generally a company takes at least a year time to earn a return investment. Thus, capital employed figures should be based on the beginning of number. So operating profit they provided 1102.8. We will add back the non-cash item, marketing expenditure, training expenditure, research and development less tax amount and lost tax relief on interest. Net profit, no PAT. Net operating profit after tax 9702.970.24 and capital employed. What is the capital employed? From the statement of financial position, we will take the opening starting amount 4,564 and marketing expenditure capital 46.2 and adjusted capital will be 4,610.2 and WACC will be they provided off. So we will take 1 by 2 into 15 into 7.8 into 70%, that is 1 minus tax rate. Next, no PAT minus WACC into capital employed, we will get the EVA. The recomputed EVA has increased from 307.98 lakhs to 498.62 lakhs, which shows positive position for BC has it added up to the shareholders' heads. And here they provided which will be added, which will be deducted at the time of calculation.